Welcome to another S&P 500 analysis. Today is November 16, 2022. The market is giving us mixed messages today, so it could be setting up a sucker punch. And we'll take a look at the price action and also the internal and see what are they telling us. Stay tuned. Let's start off with our internal chart here, this intraday chart. Once again, we are noticing the down volume is greater than the up volume. And also the up-down volume ratio is a little bit over 5-to-1 in favor of the down volume in the New York Stock Exchange and almost 4-to-1 in the NASDAQ in favor of the down volume. And at the Russell 2000, it was a little bit over 5-to-1 in favor of the down volume. And once again, we're seeing the daily advanced decline is negative. So that tells us this market is in a weak spot and most likely is going to finish off the negative. Likewise for the NASDAQ. Now, here's the tricky part today. Notice the tick, the cumulative tick for the New York Stock Exchange is in a positive territory, while the index, the S&P 500, been negative all day. And also the NASDAQ cumulative tick is negative, and also the NASDAQ 100 is negative throughout the entire session. So this is kind of throwing a little bit of a twist because the Dow Jones Industrial been up most of the session, okay, and it's been up, and that is due to some of the like Walmart, United Healthcare, and those stocks, those more of a defensive stock, was basically holding up, and that could be one of the reasons throwing this twist on the tick. Because the thing is, when we see something like that, we have to look at the entire picture to get the total context. Because right now, if the market is really strong, and as what what the tick is telling us, that most of the transaction is on a positive tick, then we should not see more downside volume than upside volume, and also we should not see so many declining stock versus advancing stock, because we have over 1,000 more declining stock than advancing stock in the New York Stock Exchange, and 1,800 more declining stock than advancing stock in the NASDAQ. So once again, we basically have to look at the total picture, because sometimes one or two of these internal will give us a conflicting picture, try to throw a little bit of a curveball. So we got to be careful on that. And here on this chart, this intraday chart here, you see this is the S&P 500 cash index. It's a pretty kind of choppy day. It didn't do much, right? It just kind of chop around within this range here. And notice that the new high, new low is actually the same. I believe there were 53 stock make new 52-week high and 53 stock make new 52-week low. So the new high, new low is 0 today. But again, looking at the up-down volume ratio, it's been negative throughout the entire session, and it's below 5, so it's 5-to-1 in favor of the down volume. Now the VIX is kind of steady, it didn't do too much. It's just sitting at that 24 level. But notice the put call ratio during the lunch hour before 1 o'clock New York time, it actually went above 1 and stayed there throughout the remaining session and finished at a 1.06, so slightly above 1. That tells us that there are more put being purchased than call. And also looking at the advanced decline, you see that the advanced decline is actually negative. So that tells us there are more declining stock than advancing stock. Now here, let's take a look at the E-mini S&P 500. First, starting off with the market profile chart, you see that is pretty much of a balanced day here on the market profile, but it did leave a poor high and a poor low. There's no single print, so it's like I said, it is a nice Gaussian distribution in terms of the TPO for the market profile. So tomorrow we still have this poor high here from yesterday, the 15th, up at 4,038.75. We're going to be keeping an eye on this poor low tomorrow at 39.60. Remember that 39.60, which is this low here, And we're going to talk about this 3960 a little bit later. Right now, we're basically just kind of looking at this poor low here. Tomorrow, if we could take out this poor low, then look for these poor low and a single print. Get down here on this single print. So it could come down to this 3940 here on the market profile. Now, if it come up, take out this poor high, then watch for this point of control to get tagged. Also, the other thing is notice during the after hour, we have a little bit of a spike up here, and that is due to one of the Fed head talking about that he is comfortable, with the latest CPI. He is comfortable to consider 50 basis point hike in the December meeting, and I guess that's what caused this spike. But you could also see it's kind of selling off back down to where it was settled earlier. Now let's take a look at this SPY, the ETF for the SP 500. You can see, remember yesterday we were talking about this 395. We're saying that if it come down to this 395, then we look for this thing to come down to the other edge of this high volume zone here at 390.66 and then move down to the lower range of the expected move. Still expecting to see that before the end of the week. The reason is that it was unable to get back above this 398 because we want to get above this high volume node, then pushes up back to this 400 level and then possibly make it up to this upper range of the expected move and start filling out this gap. So today with the weakness in the advanced decline and the up-down volume ratio, we basically still looking for this to come down into the zone tomorrow to see what it come down to this 390 area and possibly break through it and get down to this lower range of the expected move between 389 and 386. Now, if we switch over to the 30-minute chart here, and on this 30-minute chart, we're basically looking at this 395.04, right? You see this right here. And this look more like a head and shoulder pattern, although we got a, double shoulder here and a little bit of a double shoulder. So ignore this. Just look at this right here, like a rounding top. So here is the base that we're looking at. If it break this base, in other words, if it break below this 395, and let's use a Fibonacci extension tool and do a little bit of a major move using this as the baseline. This is the top here. And we're essentially looking for this major move at the 80% major move is inside, just at the edge of this lower range of the weekly expected move, and inside of this lower range, if it goes to the 100% major move, because it pushes down to 388. So that's basically the reason why I'm kind of looking for this downside move to move down to this 390 area and see what it break through and get into the lower range of the expected move before the end of the week. And here we're looking at the Dow Jones Industrial. You can see also in this 30-minute chart, we're essentially looking at it forming a little bit of a head and shoulder pattern. And if we also do a major move on that, and we kind of get a little bit of a idea where it's going, it's basically coming down to try to fill this gap here. And likewise for the NASDAQ 100, see this baseline here. Again, basically looking at a little bit of a head and shoulder pattern. And if we do the major move, also using this as a baseline, and here at this 100%, it's basically coming into this gap area. Now, the Russell 2000 is not that obvious of a head and shoulder type of a pattern, but definitely is a little bit of a rounding top or a double top here. So if we break this and basically do a major move using this swing here, and we could kind of get some idea where this thing might be headed if it break this baseline down here. So we're basically talking about somewhere around, again, into this gap here at 1798 or 1800. So that's the tonight's recap. Hopefully you find it informative. Thank you for watching, and be sure to smash that thumbs up to help me promote this video.